Hello YouTube and welcome back to the Dividend portfolio. It is September 6th. We're going to do a little dividend portfolio update, show what came in through the rest of August and what has come in or is coming in September so far. We're going to take a look at some of the dividends or some of the funds that I added, which I talked about adding, and I think I dropped at least one that wasn't performing that well. So uh, this is the most recent chart on the left side. This is total dividends for the year, and I think this was started in April. And then on the right is the monthly. Um, so going up to the top on the left side here, we've got the grand total for the year, which started in April, and right now we're up to $523, and the total monthly for September right now is $76, and we ended August with 231. Um, there were um, maybe a couple that were added. These are all the dividends, and just to show you, down here, this is just a little example of like what comes in, like a view from Robinhood. So some of these at the top just say pending. They'll hit like in the middle of the week or whatever, but 1650, 419, 430, 759, 712, 894. This is not the whole thing, but this is like a readout you can basically get in Robinhood. So I take those numbers and I just put them here. So August going across, notice this 105.43, that's MSTY, which I did drop, and we can take a look at that. Um, and we're gonna put rank what I have in terms of kind of like safety or whatever. Um, so going across, so we won't see this big 105 anymore, and I think I kind of broke even on that, and um, it was time to cut it. But that's okay. Anyway, so this is everything going across, and then this is in September in the brighter yellow. Some of these have already paid, and some of these are in the pending, but I added them anyways. So we've got the 14 cents, 12.73, 8.94, 7.12, 4.89, 2.79, 7.59, and so on. There's a 16.50. Um, so so far, yeah, some of these are pending, but that's okay. So far for the month of September, it's $76, and it's September 6th today. Um, and I think even the July also included this $44 payment that was also MSTY. So these super big ones we won't see anymore. But I think I knew that was a riskier position, and it was not going the way I wanted, so sold out of that one. But if you watch the other videos, I kind of knew it was a smaller position, so the whole thing's about being diversified. So let's take a look at some of these, and we'll like rank them. So, no, this is a little bit small, but this is the total returns here in not in the monetary value you're seeing is the current. I believe it's the current share price, and then the green is the percentage return that's on the total holdings. This percentage return doesn't like account the dividends that are bought back in. Um, so let's say a fund stayed flat the whole year but paid $1,000 in dividends in that year, it would still just say 0%. Let's assume like, yeah, chart just stayed perfectly flat for 12 months, but just kept buying in. that $1,000, it would still just say flat, even though that $1,000 dividend income did come in. If the auto buys are on, it's not going to show here. So on the left side, these are, we'll say, the winners. That's too big. Just meaning that the fund itself, since I bought them, is up by something, and these are the losers. But that's okay. The market goes up and down, and we'll talk about this group down in the bottom, which where MSTY would be. These are kind of the risky category, and you'll see why. And they're smaller holdings compared to like the whole portfolio. I'm still okay holding on with these because they're more spread out funds, and we'll see what the yield return on them is in a minute. So basically, that's everything with the portfolio right now. I think a while back we said it would be nice to be hitting $100 a month, and it's gonna be interesting to see. I think these 2 months they are a bit inflated, right? Because of here this 105 and this 44. That's MSTY, um, and but hopefully we added some other things, and we'll see what September ends up coming in. We'll probably have a more like normalized chart without that higher risk um, particular fund. So we'll see if we get close to the $100. Like in July, without MSTY, we probably would have hit like 90, assuming that money was in a different fund. So I think we'll hit 90 in 90 or 100 in September without needing that crazy MSTY. So let's go over here to this list, and we'll just go down and look at the yields. So let me grab this, and we'll do the yields in black. So the first one is JEPQ, and so we'll put this in. Is this right? JE, okay. 42, yeah, okay, I knew something was wrong. JEPQ. Okay, so this is the NASDAQ income, etc. So this one, the yield is 11.13%. And then I'll kind of just like round these out. Remember, the expense ratio is also what they're taking off per year. So just to do some quick and dirty numbers, I'll just call this 11, and we'll go through all of these. So the yearly on this is 11%. QQQI. Another NASDAQ. The yield on this is 13.91, and the expense ratio is 0.68, so we'll just call this 13. SPYI is next, and again, this is the yearly yield. And so if these do go up over the year, we get the 11% plus, the 4.2%. So SPYI. Part of the purpose of this is to just show what can be done and that you can do it. It says yield is 11.89% and the expense ratio is 0.68, so we'll just call this one 11. We got, a little bit of change in there, but that's okay. Next one is GPIQ, GPIC. Another NASDAQ. So this says 9.91 and the expense ratio is 0.29. We'll just call it 9. And these might, well, I don't know, we sort of see a trend down, but JEPI, JEPI. This one's 8.4 with the expense ratio, we'll call it 8. SPHD, so SPHD is new and so is SCHD. These ones should follow the market closer, but will have a much lower percentage. But money in these, like these other ones, overall are gonna follow the market less closely, meaning the ups will be less, but the downs will be less. But the yield is much higher. It's kind of like what you're trading off, right? Higher yield, but they're kind of, the fund itself is more stable. And then these ones you're going to see the yield is a lot less, but they do tend to follow the market itself closer. So building a little bit more of a mix of things here. So SPHD. And if I show you the chart, I didn't show the other charts, but like this follows the S&P, and it's not as big of moves as the S&P, but it follows it more closely, whereas the chart on the other ones, like I'll go back to JEPI, it kind of more stays more stable, like in a range, which is what we expect. So okay, so the yield on this is 3.45. So we'll call this 3%. But when the market goes up, maybe we'll see bigger growth. It could be wise to, if the market is kind of in a top, but I don't think it's totally done yet, it might be wise to rotate into some of these more flat funds if we're going into sort of like a bear market. Clause. This is one of my originals, one of my favorites, and I've talked about why before, and you'll probably see a little bit why. I'll show you the chart on this one. Yield is 8.6, expense ratio is 0.5, so we'll do 7.5. But yeah, once again, something like clause, this was like the start of the fund, so it did go up, but you'll see this ideally is supposed to stay very stable in this range, and like even these low points, see like right now the value of each share in the fund is $26, but even at its lowest point it was about $25, 24.90, 95, and this spike down is the tariff scare stuff, and it still only went down to 25.62. So the way that a fund like this is supposed to go is it's just supposed to stay like super stable. It shouldn't really have even this move between 25 and $26 like is not much at all, right? So expecting this to pretty much stay flat. Um, so we'll put 7.5 for the yield. SCHD is pretty similar to SPHD. And yield is 3.67. This one has a much lower expense ratio, so I guess to sort of reflect that, we'll do 3.6 to compare it to SPHD, 3.6%. And so yeah, all these, the fund itself, what I bought in, is up by some percentage since I bought in. And these ones near the top, I bought most of these earlier in the year, so they've had more time to grow. And then these ones, we'll do like the regular ones up top first. The ones down here, the higher risk ones. Oh, I just realized you guys can't see my mouse, but okay. JAAAA. So down 0.23%, not much at all. And this one and the next one are very similar types of funds to claws. They should basically stay flat. And I'll show you like how that range is. So JAAA. Yeah, I just realized that, yeah, this number is not the, I guess it's not the price of the fund, it's my total return, which doesn't include the dividends. So I'm up $42 on JEPQ, but then once you add the payments, it would be like 42 plus whatever payments have come in. Okay, so for example, JAAA, we're down $3, but if we've made $30 in payments, we can like maybe add all that up at the end of the year or something. So do the 5 here, and also you'll see there's been a little bit of up and down, but this fund is basically designed to stay flat. And even at the lowest point, it was $48.90, and it's up to $50. So this is like a fine range. The yield is 5.73, expense ratio is 0.2, so we'll do 5.5. And again, these are the dividend yields. JBBB. This is similar to JAAA, but should have a higher yield and possibly a little bit more volatility. But again, supposed to stay pretty in a range. The tariff scare went down to 47, and we had a high of about 49, almost 50. So I'm expecting it to stay in this range pretty much. So higher yield with this one, 7.87%. We'll do 7.3 with the expense ratio. Also, I bought into these later in the year. These were, I think, added mid August. SPYT is the next one. It's a S&P fund. Okay, so this is a higher yielding. The expense ratio is a little higher. Let's go to all time. So this one is dipping down some. Um, so we'll pay attention to that. The yield is 20% with the expense ratio. So we'll call this 20. I still don't consider this like a super high risk one. Um, and then going into the high risk blocks, I only have one share. I just kind of wanted to see what it would do. This is one that basically follows cryptocurrency companies, and it does something to pay a dividend. Don't remember what the yield is, but I just bought the one share. Yeah, you have to look this one up somewhere else to find the yield, so I'm not even sure. I think it was like 40% or something, but I kind of just wanted to see what it would do, so maybe I'll look that up later. Y max. So these ones are in the higher risk. And you can see why, compared to all these ones I consider the lower risk, that even if I bought them later this year, they're only ever down like usually less than a percent, 1.35% for SPYT. Whereas these ones are experiencing more volatility. Um, but again, this is like all part of a larger portfolio, and this is not. This is just one. You're seeing just one part of um, a. I started the strategy, but it's not the only. Um, I don't necessarily think this should be, not financial advice, but showing this as something that you can do that could potentially be part of like a larger portfolio that includes S&P 500 and includes like other growth stocks. Um, so let's go to Y max. So we should see, yeah, a bigger drop in this. So the yearly yield is 67% on this with the expense ratio. So we'll call it 66. So similar to, I'll look at MSTY, which I did sell out of. I didn't like the way it was going, which in that one was like 140% or something. So, the idea is, even if this drops, 20 or 30% in a yearly time frame, should be or could be paying out more, right? If this stayed, here and basically was negative 10%, but the dividend payments are far outpacing what this is going down, um, then the overall at the end of the year is still higher, right? Ulti, which I think is higher risk than YMAX. Let's see. Yeah, this is yeah, this is another, like, I don't know what to say, other specialized type of fund. Reading about this, people were essentially saying like this should be like the total low point. And idea being it won't go lower from here. So it could be a good time to buy into it. That's just one, way to look at it. So this says 129. So with expense, we'll say 128. Um, so yeah, this one, if it's down 10% on the year, but the yearly dividend payments add up to 128% of whatever you're holding, you're still far and away ahead. Um, so, but, this trend basically, these are kind of like more core things, you could possibly say, and these are more experimental. They make up not a large chunk of the portfolio. Um, but we're trying to snowball this, and let's see. And then the one that I dropped, so that's 128%, and then MSTY that I did drop, I think overall it's just continuing to generally go down. Um, yeah, I part of me thought that like around this level at $20 was basically going to be the low, and just kept going and just kept going. So I said, you know what, you cut your losses, and but yeah, the yield on MSTY is 179%, which is probably why we're seeing the fund just continue to drop and drop and drop. So not really worth it for me, considering I have other investments, and I I want this strategy to work. Of course, it's nice to see that $100 dividend payment, but basically when I broke even with the dividends, I was like, I don't think this is going to go in a good direction. Plus, watching other things like what Bitcoin is going to do. MSTY basically is Bitcoin. Like, I don't see it going well, and I'm not trying to manage this on like a daily basis or something. So I'm not gonna do the whole weighted percentages, but let's just see what would happen if we add all these up and divide by the number of holdings. We'll skip the really big ones and see where we're at. So we'll do 11 plus 13 plus 9 plus 8 plus 3 plus 7.5. The weighted would mean we're taking things like SPHD and SCHD, which are just like a tiny fraction of the whole thing, and weighting them. So this won't be like super accurate, but plus 20. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 divided by 11 is telling us we're averaging 7.9% overall with all these together. We'll do it again and take out these really small holdings, and it should bump up to like, I don't know, 12% or something. So we'll do 11 plus 13 plus 11 plus 9 plus 8 plus 7.5 plus 5.5, 7.3 plus 20. So 92, 1, 2, 3, 4, 5, 6, 7, 8, 9 divided by 9 puts us at 10.25% overall. So yeah, that's that. I mean, I still like YMAX and Alti, when we add those in, I think we're probably coming in higher, 12% or more maybe. Um, but anyways, that's the update. That's where we're at. We did little adjustments to the portfolio, and yeah, continued goal is to hit $100 a month, and these are all rolling back in. All these dividends are going back into the whole portfolio, which is ideally getting that snowball effect. And we'll see where we end up at the end of the year and keep going from there. So, thanks for watching. Again, not financial advice, and I'm trying to show that this is possible and something you can do, buying into these different types of funds, and want to show overall what they're doing. So thanks for watching.